you don't want to. So it is being recorded. See, there you go. There's no if, no if. Please remember, if you did not provide your full first and last name when you logged in, you just want to provide it to us in order to get the CE for CPCU credit. Sue Scavera will provide her email if she could in the chat. Just so you have it, so you can reach out to her if you need to with that info. And with that said, let's get things going and get to our speakers. So again, welcome, Andrew Drayer, spending some time with us today to go over mergers and acquisitions. Thank you so much for joining us today.
Thank you, Matt, and I appreciate the time. I'm happy to be here and really grateful that you guys saw fit to invite me to do this. I understand it's Ethics Month, and so we'll try to turn the conversation a little bit around some of the ethical challenges that certainly do come up in the mergers and acquisitions world. Yeah, I'm excited to spend some time. Why don't we just agree, Matt, that we'll try to cut off at about maybe 15 minutes of, so that we do have time for any questions we can have. I know I'd always prefer that this be in person, so it's a little bit more conversational, and that's a bit of a challenge when we do these things virtually. So I'd love to hear from some folks if there are questions, and you won't hurt my feelings if there are none. I'll try to keep everybody awake, I promise.
That just means you did a great job explaining everything. If there are no questions. Yeah, be happy to do that. I'd be happy to do that, most definitely. So I figure we start, just I know we have a whole bunch of different people on the Zoom today, so some may know you, some don't. I know a few do, so just wanted to get an introduction for you, Andrew, just your prior career experience. I know you have some time on the company side and of course now on the agency side, and your current role with Salem 5, because I know you're obviously involved in mergers and acquisitions. Just want to give you a chance to kind of go over your background a little bit.
Sure, I'm happy to. Yeah, great. So, yeah, I have all of a sudden a little bit of an interesting path to where I arrived at today. But I am an attorney by training. As a trial attorney, litigation attorney, I really did not have much of a background in mergers and acquisitions at all. Certainly, there was plenty of time spent in insurance dealing with contract formation and, certainly understanding the impact of how business decisions get made and reducing things to writing. But this was not something I had a particular background in. So I can't say that my legal experience really factors in, in a significant way to what I do now. We certainly have lawyers that assist us with, closing deals. But I did work for a couple of firms in Boston. That led me into specifically insurance defense work, which sent me to work for a couple of different carriers, including MAPFRE Insurance, and a lot of my old friends are on this call, so nice to see and hear from everybody. It really was there at MAPFRE that after several years of helping to start a staff counsel office in New England and working closely with my claims partners and defending MAPFRE insureds, that in what seemed like a big upstream move, I took a position in business development. And in hindsight, it really made a lot of sense. I think I've been very customer focused, very relationship focused my entire career. And that's really what the job was. I had responsibility for some 900 agents in Massachusetts, probably 1,200 overall in New England. And when one of those agents approached me, a couple of summers ago and didn't have a succession plan for their agency and started talking to me, that made a lot of sense to me too. And that's where I find myself today. So Salem 5 had designs of actually acquiring a large agency, and that agency would have brought certain talent in that would have helped them with their succession planning. And when that didn't work out, when that fell through, I was the backup plan. I've been a backup plan in a lot of arenas in my life, and it's just fine by me. I think it's worked out well for them, and it certainly worked out very well for me. So that's what brought me to Salem 5.
I'm happy to be in any plan. Let's put it that way. Being in a plan is backup or not is always a good thing. Yeah, I think, yeah, getting into like the M&A, I think you hit on one thing when you mentioned succession planning, but just to kind of get more into that, before this, I was trying to get just some more information on M&A and what's been happening over the past 3 years. So I went and grabbed some info from the standard, which, sorry, not the standard, the agency checklist, which I looked at like data from 2019 to 2021, because they keep track of all the mergers and acquisitions. And, you got COVID in there. Obviously, you had factor that in, but 2019, 25 acquisitions, 2020, 32, 2021, 49. So, that obviously is a trend in what we're seeing. And one of the things I wanted to talk about with you today and have you a chance to talk to all of us about is, what are the reasons behind this increase in M&A activity? I think you probably touched on one of them. You mentioned perpetuation plans. But I'm sure there's other stuff like talent gaps, overall market return. We hear a lot about private equity firms. So just in your perspective, your role, what do you see as a lot of the big driving reasons behind M&A activity for agents?
Sure. Yeah, and I think you kind of mentioned most of them actually, Matt. I'd say the number one driver really has been that borrowing money has been fairly inexpensive to do. I don't want to say it's been easy to do, but if you're a large private equity-backed organization, then you've been borrowing money at a very favorable interest rate. And if you're getting the type of return that an agency, which has recurring revenue, I mean, just think about what good retention is, right, on a book of business. Good retention is probably somewhere in the 90% range, give or take. So even without a sales force, you're seeing very strong returns on this investment. And I think the private equity world figured that out some time ago. And with interest rates having been as low as they've been, it's kind of been easy money and a really good place to park that money. Banks like Salem Five, like Eastern, they recognize that too, and they started to get into that space in earnest. It's as you mentioned, it's always been an issue of succession planning, but the world has really changed, right? This was property and casualty insurance agencies. This was family-run business, right? This was Main Street, small business at its best. And a son or a daughter would often succeed the parent who was running the agency. We don't see that like we used to. And even where we do see it now, one of the big challenges that the next generation faces is, oh, hi, Lee. One of the big challenges that the next generation faces is having the type of capital available to be able to finance the buyout of a parent, right? So we just don't see that happening like it used to occur, and it's really a situation where if there is a son or a daughter in the mix, they're going to need some sort of financial support to make a deal like that happen, unless the parent has been able to structure the agency to where they can bring the son or the daughter in a financially viable situation. I think it's also become increasingly complex. The marketplace, you have insurtechs coming in, creating a lot of disruption, and the competition has really never been more fierce out there. You think about direct writers coming into the state, and some of the competition that more independent agency focused carriers are facing. It's really turned into a very challenging competitive marketplace.
Yeah, it's interesting. You mentioned, talent and things like, well, you just mentioned, siblings or sons and daughters taking over, but on the talent side, especially on the carrier side, we try to get people, and you see it all the time in open positions. And sometimes I wonder, for an agency, like you mentioned, all the directs, all these other people, the insurtechs who are, big employers too, they're looking for the talent out there. Do you ever see a situation where you think that, you have an agency that's maybe looking, saying, geez, I'm just not getting the talent I need, so part of that may be a reason to say, hey, maybe I do need to go look at making a deal with another agent or whatever to bridge that talent gap, or to get someone that can maybe get me the talent we need? Is that something that you see a lot, or is a little bit?
Right. So no, good question, Matt. And I think that that's part of it, depending upon what your model is, right? So when we think about acquiring agencies, there's obviously a financial component, right? We're buying a book of business, we're buying the assets, and we are trying to grow our business. And I'm speaking for Salem Five, but in general. But there is always that opportunity to acquire talent as well. And each one of these situations, you look at based on their own merits, and you consider what are those assets. I think chief among those assets is definitely the personnel, right? The success of the agency is largely based upon the people who've been running that agency and who've made it go. And when you can acquire an agency that's going to help add to your talent pool, it's a tremendous opportunity. Is that the norm? Does that happen all the time? It depends. It really does. Do we go looking for an acquisition simply because we're hoping to acquire the talent that comes with it? I would say it's a combination, but it probably leans more toward the overall financial return that you're going to see on the acquisition. We have had a situation recently where there is an agency that we've been looking at, and there was a producer at that agency that, at least on paper, seems to be tremendous. Not the only reason that we would pursue that opportunity, but that's really what the opportunity is in that particular case. It kind of leads into anticipating a question: what do we look for, right? How do we go about making these decisions? I wish we could simply sort of line up all of the potential opportunities that are out there and say, we're going to go after these 3 this month, and we're going to ignore these other 15. It doesn't quite set up that way, right? It's really about being opportunistic, because we see all the time agencies that we'd love to acquire, but whether or not the opportunity to acquire that agency is going to present itself at the time that we're ready to approach it, those two things don't necessarily sync up, of course. And then when maybe that agent is ready to sell, we've already moved on to something else, and we're in the midst of trying to implement an agency that we've already acquired. So the hunting is very much born out of the opportunities that are out there and the timing of what those opportunities are. The marketplace kind of gives you what it gives you. It doesn't mean that there's not a fair bit of sourcing and time spent cultivating relationships, but to some extent, it really just comes down to timing.
Yeah, I definitely have some questions on that piece too. I mean, that's a big part of what we wonder is, what are you looking for? But I do also wonder, because we see a lot, I see a lot of it in the trade magazines. We mentioned private equity, the big deal. And then, you look and you say, well, what's the difference between if an agent was out there, considering a merger and acquisition? What's the difference, do you think, dealing with that big private equity firm and dealing with like an agency that's trying to make that acquisition? Because I got to imagine the two of them, they're different. I would imagine they feel different, from just what they're going after, as far as, private equity may be more based on portfolio investment opportunities, that type of thing, versus an agent relationship piece. Do you see differences on those two?
Yeah, so great question. I won't paint it as private equity does this and non-private equity backed or bank-owned agencies do that. But what I will say is there are obviously different models that different buyers will engage in, right? There is, with every agency, a profit margin, right? And so if we are looking to acquire an agency and we want to kind of strip down as much as we possibly can to make it as profitable as possible, as quickly as possible, there are ways to do that. And it's really critical I think that all the parties are very upfront about what the expectations are in that regard. There are other models where you're acquiring the agency, you're acquiring those assets, and you intend to leave in place the personnel, the processes, how they do business, right? So there are, and they happen to be private equity backed, but there are certain buyers that when they acquire an agency, they don't intend to change anything that the agency is doing. And in fact, even the fact of the acquisition stays fairly invisible. And it really becomes up to that agency to hit the growth goals, to hit the profit margins that are expected based on the structuring of that deal. When we set about to acquire an agency, our goal, not immediately, but ultimately, is to make that agency a part of Salem 5, is to make that agency part of our culture. They're going to be in a different location. Maybe we're going to keep that location. Maybe over time, we're going to merge that location. But ultimately, we want that agency to become a part of Salem 5 and to have a similar set of processes and culture and behaviors. And, they're going to become employees of Salem 5. So, it really just depends on the structure and the model that the particular buyer is interested in and what their goals are that they're trying to achieve.
Do you think there's like is there, maybe they're the same, is there like a certain value prop for going the agency route or going the private equity route? Is like, if you're going in to talk to an agent and maybe they've been approached by someone in private equity, do you have like a value proposition that you would use on your end to say, well, this is why I know you're talking to them, but why you probably want to talk to us, or why you want to go
Right. Yeah. So I would say, for certain buyers and sellers, there's really a lot of allure to, we are going to, we're going to acquire the assets, but we are going to, and this is typically how a lot of deals are structured, where there will be an earnout, right? There will be a period of time, let's say 3 years, over which the seller is going to earn some portion of whatever that acquisition cost was. And during that period of time, the buyer is basically saying, we're pretty much hands off. These are the benchmarks you need to hit in terms of growth. These are the benchmarks you need to hit in terms of profit, but we're pretty much going to be hands off, and it's going to be up to you to earn that. That is alluring to certain sellers, right? Because they have the feeling of independence, or the continued feeling of independence, and they don't feel as though they're all of a sudden going to have to make a lot of changes to the way they do business. I think what we're seeing more and more is agents that are ready to sell aren't simply selling because they want to cash out. They're not simply selling because they're done, they've hit retirement age, they're ready to go. That's certainly a population of sellers that's out there. But what we see more and more, and there was some discussion about this before we got started, is things like, this is an incredibly challenging labor market, right? Finding good talent, retaining good talent, making sure that the sustainability of the agency from a customer service standpoint is going to be there, has gotten more and more difficult. So we will find sellers who are looking for a platform. We'll find sellers who really have kind of, not given up, but really rethought how they want to handle recruiting, the challenges with compensation, with benefits, with employee perks, training, all of these things that if you are a smaller agency, they require investment, and that investment takes away from time spent selling, right? Time spent servicing customers. So I think, the value proposition, I would say, only speaking really for Salem 5, is we provide that, right? We have a dedicated human resources department that has a training department. We collaborate with our bank partners to ensure that, from IT to telecom to all of these departments that we have at Salem Five, which is often a guy, right? Maybe outsourced, maybe an employee, maybe it's the principal who does a little bit of both. That's a real value proposition that I think we do have for the agency seller who is looking for some support, who's looking to maybe continue working for a while, or maybe is done working, but wants their employees to land someplace where that type of support is going to be in place.
Yeah, and you mentioned, that agents aren't really looking to cash out, which is interesting because, you always think, well, someone, we do as an industry, probably have an older industry, but getting close to not quite retirement, but you hear that all the time in a lot of the trade magazines. So based on that, I do wonder, because I don't know the answer to this, and I'm sure a lot of people on our call don't, what type of deals do you typically discuss with an agent? Now, not to get into, obviously things you can't talk about, but just in general, I mean, what is it that that makes this, interesting to an agent to say, hey, based on what I need, maybe it's whatever, stock purchases, I believe is an option, cash up front, there's maybe financing options. What is it, what type of deals do you typically go over with agents, or things that typically pop up in that to try to get the deal done?
Sure. Yeah, no, good question. So the starting point is always, and I mean this with great sincerity, and I haven't been at this long enough to pretend that I have more experience at it than I do, but I have experienced enough already to say every single one of these deals really is unique. They're unique because every single one of these deals involves people, and people will forever be incredibly unpredictable in their expectations, in their desires, and what they want to accomplish. So I think for us, being able to offer cash up front, being able to, and this is probably more of a trend that we're seeing in the industry. There is less I see and I hear about expectations of retention over time and payouts over time, particularly for smaller agencies. These are cash deals up front. That is certainly attractive to an agency principal who is ready to retire. And I think, again, I'm not going to go into obviously detail, but when you have a situation where you have more employees at an agency than really makes sense from a profit standpoint, you have to get creative, right? You have to think about how you're going to structure these deals, or you have to say, we're not going to take all of these people with us. And that, again, that has to really be made clear to everybody up front. And that can be challenging because the last thing you want to do is acquire an agency and walk into a morale issue right off the bat. It's important to remember the agency principal has decided to sell the agency. The employees haven't, right? The employees are just, part of the sale, so to speak. And so that's a really important emotional aspect of the deal that has to be given consideration. How that reaction is going to go, I think you're often going to have kind of a rosy expectation from the agency principal who's selling. And I think it's important to understand that the opportunity to communicate with those employees is one of the real challenging parts of these whole deals. So let me sort of segue into that. There's a few schools of thought on how to interact with the employees during the sale, right? One is you don't tell them, period. And there are definitely some buyers out there that would say that's it. Yes, buyers and sellers for that matter, who would say you don't tell them, right? And there's a fear that letting them know is going to somehow screw up the deal. You get a broker involved, for example, who's representing the seller or the buyer for that matter. They're probably going to be, pretty ardent that the employees should find out as late in the proceedings as possible. That kind of brings us to one of these ethical dilemmas that I promised to try to talk about a little bit.
Yeah, I think you're right. That's a big one.
And when is the right time? And there are different views on that. For me personally, no, you're not going to tell them out of the gate. You are going to wait. You're going to make sure that you kind of are getting to the finish line. But I do believe, particularly with the way we're structured, and that these people are going to become employees of Salem 5, you can't have that conversation the day before the deal closes. You certainly can't have that conversation the day after the deal closes, right? So it's one of those opportunities to really demonstrate what the value is going to be to those employees and have those employees become almost agents of the deal getting done, or not. But that's information that you really need to have as a buyer, in my view. And it's information that I think those employees really deserve to know within a reasonable period of time before the deal closes.
Yeah, I think I'll just say, I think transparency is a big part of being ethical. Because I mean, obviously, if you're not transparent about something, why aren't you transparent about what's going on? So I think that's huge. Like you said, too, I mean, having the buy-in from the people who are in the new agency. I got to imagine for someone who's doing the purchasing, last thing you want is you have this purchase and now you have personnel who are like, I didn't want to do this in the first place. And now you're trying to win over hearts and minds on that end. So yeah, I can imagine, just from an ethical point of view, I mean, that's got to be a big part of what goes into these considerations when you're doing this.
Absolutely.
And you have multiple parties, I would assume, that are kind of involved here. Like I assume you have attorneys involved, brokers, and as well as the agencies who are taking place too. I assume there's probably ethical considerations there because you're going over information that is not public knowledge, things that people shouldn't be aware of. So I imagine, how do you go about handling that, those type of situations?
Yeah, so obviously the information is confidential, right? We've all signed confidentiality agreements and non-disclosure agreements. Once we start looking at customer lists, I mean, it all becomes very sensitive, and all of this is controlled through contracts, right? But there is a lot of real estate between what we say, what we reduce to writing, how we reduce it to writing, and then ultimately what we do. It's very easy to say during a negotiation, nothing's going to change, everything's going to be exactly the same, right? And I can argue probably pretty comfortably that nothing did change, right? You still run your agency more or less the way you've always run it. You just use, equipment now that we've furnished to you as the buyer, and you get your pay from a different routing number, but everything more or less is the same. That's where the area does, in my view, get gray, and where, as you said, Matt, transparency really is important, and the ability to communicate and create expectations, reasonable expectations for how things are, because it doesn't do anybody any good to create a false sense of security for employees who are going to very quickly feel as though the whole world has changed for them. They are going to, at some level, feel as though things have changed even when they haven't, right? Just psychologically, they have a new employer. In the case of us, they now work for a bank, or they work for some large broker or whomever. That is going to be a change. That is going to be a psychological, emotional adjustment for them to make. So making sure that there are leveled expectations up front, I think, is really important, really, really critical. And you mentioned a few of the players, right? You have a seller's attorney, you have a buyer's attorney. If there are brokers in the mix, there are some competing interests of all these parties, right? The broker wants to get this deal done. The lawyers want to get this deal closed. the seller wants to make sure, that his or her expectations are going to be met. And then the buyer is trying to make sure that his or her expectations. So we have to meet in the middle on these issues, but to the extent possible, you really need to ensure that what you say is what you do, not just because it's the right thing to do, but because you're not likely to be involved in a lot of deals in the future if it turns out that you're not gonna be somebody who abides by what it is they say. So it really does, present some important distinctions between what's a business decision and what crosses the line of proper ethical behavior. But those are kind of the waters that we navigate.
Yeah, and absolutely. I mean, it's like you said too. I mean, in anything, it just could be your own personal career. Like you said, if you come across as unethical, I mean, are people going to deal with you in the future? Are people going to be able to trust you? And that's a whole nother ball of wax that you're getting into.
Yeah, and look, I feel that I have been in the relationship business my entire career. Even when I didn't know I was in the relationship business, now I know I'm very definitely in the relationship business. The currency of relationships is trust, right? Plain and simple. And so we do that with our business partners, whether they're on the other side of a negotiating table or not. And we certainly do that with our employees, whether they're our current employees or they're our future employees. But those are really important behaviors as you go through a process like this.
So that brings up another question of, so now that you've been through and you processed an acquisition, you've gone through with an acquisition, and now you're doing your next part, which is, how do you handle relationships after the deal is done? I mean, I got to assume that's a pretty big piece because you have all different relationships now that are new. Like you mentioned, you have new personnel who are wondering, what is this company that I'm dealing with here, and what do they want? What are they looking for me? And you could have new on your end being purchaser, new customers now, new insureds that are looking to you for policy servicing and probably still dealing with their agent, no doubt. But then you have carriers who maybe have a new appointment that came along with it because you purchased an agent. How do you handle all those relationships after the deal?
Yeah, good question. So what you do is you hire really smart people to take care of all that stuff and recognize your own limitations. So implementation, right, which is what occurs following the actual close, following the actual effective date of the acquisition. Implementation is definitely where we earn our money. There is a I think I can quote him, although it shouldn't be for attribution as much as our friends from the Standard are here. But Jaime Tamayo did famously say after an acquisition a number of years ago, buying companies is the easy part. It's the day after that's the hard part. And I remember when he said it, but it's really true. It's really the challenge really starts the day after. And so all those things that I referenced, right? The employees, people are your most important asset, and they are also, at times kind of the most challenging to manage because they're people, because they have, high expectations for their employer, and they want to be someplace that they want to be. And so when you have all of a sudden found yourselves in this relationship that they didn't really sign up for, you've got to do a lot of work to make sure that you build their trust, all those things that we talked about before. There are many technical aspects to the implementation that certainly have to occur, right? There are agency management systems that often are not the same. Those have to be synced up. So the IT resources are significant. Speaking for Salem 5, we have regulatory compliance issues that have to be addressed, info security issues that have to be addressed. A smaller, let's say Main Street agent is likely not been as invested in security as a $6 billion bank needs to be. So there are some real challenges that will occur. But all of these things, we get great support on. We invest the time in making sure that we do them right, but it takes a while. And these are the types of things that have some bumps along the way. And again, when you sort of didn't sign up to be a part of that, but all of a sudden find yourself in the middle of that, that can be frustrating. And that requires a lot of effort from leadership to make sure that we've got really good change management in place, that we're listening, and that we're taking very seriously the concerns of our new employees who, we're always thrilled to have as part of the team.
So with all that in mind, and I mean, going back to kind of when we started talking about the trends of numbers of mergers and acquisitions, what do you see in, maybe COVID, I'm sure probably played a role in that, like we discussed, no doubt. But what do you see in the future? I mean, hopefully, knock on wood, we're somewhat by COVID. I don't know if I can totally say that, but I'm hoping at least we're getting to a point where it's kind of becoming more, the normal of it's here, it's going to be here. So hopefully we can get kind of a little bit back to kind of what we used to do with some changes. But what do you see in the future for M&A activity going forward? Do you think it's going to be, there's going to continue to be more mergers and acquisitions? And if so, why?
Right. So I would say this. Last year, I think the big scare, one of the real big drivers was an expectation that the Build Back Better plan was going to include a change in the capital gains tax structure that was going to make not having sold your agency by a certain date. I think it was July, then it was going to be October, and then it never happened. But there was an expectation that if you didn't sell last year, you better wait because you were going to really get socked with capital gains tax. How much of that drove the marketplace? Obviously, very, very tough to say. Anecdotally, it did seem like it was a very, very hot topic. And I'd say even maybe the last 2 years that's sort of been looming out there. When COVID hit, there was an expectation that agents who really were not going to be prepared to handle remote work, customers not coming in, the adoption of new technology, and all of that was going to be a big driver. I think what we saw was the resiliency of independent agents. I think what we saw was their ability to survive, thrive, do really well under the circumstances and adapt really quickly when they had to or chose to. So long as interest rates stay low, and notwithstanding what we hear about from the Fed with small increases, money is still on a historical basis, on a relative basis, very cheap. So long as interest rates stay low, it will be a good place to park money. It will be a good investment. Look at housing, right? Right now, the lack of inventory has made pricing in this area just incredible. I think if it's a bubble that bursts, and let's assume it does, I don't think it causes house prices to dip. It may cause them to level. It may cause them to flatten a bit. And I think our marketplace for M&A is probably pretty similar. Now, there is a finite inventory, right? Let's assume there's 12 to 1,400 independent agents that are still out there. They're not all for sale. They're not all necessarily what sellers are looking for. Many of them are, but it is a big number compared to those numbers you rattled off before, Matt, right? So if you say there's 50 acquisitions that took place last year, and right now we're not on pace to eclipse that. I think we had a slow start to the year, but my bet is it starts to pick up a bit. But even if there's only 35, or even if that number goes to 60, it's still relatively small compared with the number of agents that are out there. So what's not out there anymore? There's very few $30 million agents out there. There's very few $50 million agents out there, right? $60 million. I would call these sort of big to medium-sized agencies. If you're $100 million agency, or if you're, if your hub who's 3.5 billion or something like that, right? But the number of agents that are out there that allow buyers to be fishing with a net as opposed to a pole, that number has dramatically dropped off, and it will continue to drop off. So acquiring agents that are between $2 and let's say $5 million in premium, that still has some runway. It still has a good bit of runway. And if you're up for the long game, if you're up for, just kind of incrementally building by buying smaller agencies, I do think there's a pretty good runway in front of us.
Yeah, it's interesting you bring up the interest rate thing, and I'll be honest, I never really thought of that when we talk about mergers and acquisitions, but you bring that back, like you had the example of the housing situation. You look at like some of the companies looking to get into insurance, like Tesla, all these companies looking to get into insurance companies, Google and Amazon. And every time I have seen a few articles on that, they always talk about the return on investment, kind of like we just talked about. So they look and they say, well, geez, I have an insurance company and I can make 5%. Well, the thing is, if I put my money over here, I can make 15%. So why would I put my money here for the 5 when I can go for the 15? So it's interesting. I never really thought of that as being part of, the whole idea of mergers and acquisitions and the private equity money and why this money is kind of pouring in. But when you mention that, it's like it really kind of makes sense. Where can we get our value?
Yeah, I mean, if you're borrowing money at 2 to 3%, and you're going to get a very reliable 6 or 7% return over, let's say a 7-year period. Excuse me, that math, checks out pretty well. And private equity and certainly other buyers in the marketplace have realized that for some time, and it's really created a lot of the swell that we've seen over the past few years.
Yeah, I'll be curious to see what happens this year. Like you mentioned, we know rates are going up. It seems like not much, like you said. So I'd be curious to see how that pans out with trends and everything like that. Definitely. Well, that's kind of a lot of the questions I wanted to get to. I want to make sure. I know you mentioned we wanted to try to give 15 minutes for Q&A, so I think we're right at that point now. So I'm going to try to be quiet a little bit here and not talk like I usually do, and kind of open up the floor to our guests. I would say if we have a bunch of questions, feel free to chime in, unmute yourself. If we have a couple people, actually, before we get into that, we do have a question. I just saw it popped up. So it's from Jen. I believe Jen Morton's on today. So the question is this, Andrew. So when are you big enough, and are there regulatory authorities involved who have to agree with the sale?
Yeah, so good question. When are you big enough to stop buying? Is that the question,
I think
Jen?
so. Yeah, Jen, if you want to expound upon that, and we'll get to Joe, it looks like right after this. Oh, did we lose Jen? I'm trying to find her.
She says she can't talk. All right, I'm going to assume Jen's saying, when are you big enough?
I think so, yeah. When are you get to the point where you
Jen, this is America. There's no such thing as big enough. So it's a good question. So I have goals, right? I have sort of short-term and longer-term goals. And, I can really only sort of speak for Salem 5, I guess, but we want to have enough scale where we can generate enough profit that we can be a meaningful participant in the bank's sort of pillars of their financial offerings, right? So we have commercial lending, and we have a mortgage team, and we have private wealth and trust. And so we have a goal, we have an internal corporate goal of getting to a certain size where we feel we have that scale to be able to warrant investments and to be able to really be a contributor to the organization from a profit standpoint. I think it's really interesting, though, because there are definitely agents out there that don't seem big enough to be buyers, and they get very creative and find ways to grow inorganically, right, through acquisition, because they recognize how incredibly difficult it is to sell organically. The marketplace has changed. As I said before, it's become incredibly competitive. And if you are an agent with great retention, you're still losing 10% of your business every year. And so, a way you kind of play catch up, right, is to acquire, but that only lasts so long, right? You do have to eventually be able to grow, in my view, organically. Otherwise, you're kind of on this treadmill of constantly, finding yourself losing more out the back door than is coming in the front door. So it's tough to say, but I will tell you, I think most of the buyers are kind of in that mid to larger size that you hear about, but not exclusively. There was a second part to Jen's question. I'm sorry.
Yep. Are there regulatory authorities involved?
Yes.
Do I have to agree with this?
Yeah. So Salem Five, for example, is a mutual bank. So the answer is yes, but that's a different scheme than if we were a publicly traded company, for example. So it really depends, I guess, is the answer. If you are engaged in an asset purchase, which is the vast majority of the acquisitions that take place that you hear about on agency checklist or that you're aware of otherwise, you are going to be much less regulated than if it's a stock acquisition, right? And that's a whole another conversation that I'm barely qualified to even talk about. But stock acquisitions, you are, just as it sounds, you're acquiring the stock of that organization. You're not buying the assets of that organization. And so that organization stays as it was, and you just become, the majority shareholder of it. And there are reasons to do that, but generally for the type of work that I do and the type of work that we're talking about here today, you don't see that very often.
Great. Thanks so much. Thanks so much, Andrew. We have a question from Joe Shea. He's got his hand up. We'll go over to Joe.
Andrew, now that you're building some experience in this space, are you seeing any obvious or maybe not so obvious red flags or warning signs associated with a potential merger or acquisition?
Yeah, great question. Yes, Joe. Short answer is yes. And I'm trying to think of examples that won't give away to Lee Gaudette, who I'm looking at, so he doesn't run off and buy them this afternoon. But so I think, I kind of referenced it earlier, understanding the ratio of what the agency brings in for revenue compared with what their overall, particularly employee expense, right? Expenses are manageable, their country club or their car or their grocery. Things like that, you can sort of wipe off the balance sheet in a hurry. Employees are a different story. And when you've got a really well compensated employee, it's really important that you understand what that employee does for the organization, because that employee might be earning every nickel that he or she is entitled to based on what that particular business model is. But really making sure that you have a good grasp on the day-to-day of what those employees do who seem kind of out of line with what you otherwise understand that job title and those job duties to be for that type of position that employee might be working in. And then, along the same lines, there are different views on how many employees you should have per, hundreds of thousands of dollars of revenue or millions of dollars of premium, right? And just, those are simple things. I wouldn't even call them red flags, Joe, but they're really important, going into the transactions. And then what has the agency been doing from a growth perspective for the 3 or 4 years leading up to that acquisition? Have they shrunk a little bit? Have they shrunk a lot? Are they actually growing? those are obviously really important considerations. And then, you know, what is the agency principal's plan? When I hear that the agency principal, who is of a, let's say, significantly advanced age, wants to work for 5 or 6 more years, that usually gives me a little bit of pause.
Thanks, Andrew. Interesting stuff.
Thanks, Joe.
Great. Joe had a great idea. If you want to hit the hand up button, I can definitely see a lot easier, or use the chat. Either way, I'm taking a peek through right now. I don't see anything in here as of yet. People are kind of quiet. I think you got answered all the questions. And Lee Guydet hasn't left his office yet, Andrew, so you're good. He hasn't tried to jet out and buy it.
I got my eye on him.
Keep an eyeball on him, dude. Jack's here too, so we're good. You got both of them in the.
I know.
Good. Any other questions? Anything else that anyone would like to ask while we're in? Oh no.
He's got his hand up. This is the one. This is the one I've been dreading, Matt.
All right, go ahead, Lee. Have at it.
I just want to welcome Andrew to the agency community.
Very good.
After
Thank
all
you.
these years of toiling on our company partner side of the house. And I just wanted you to opine on how easy it is to line up a acquisition and complete the deal.
That's a
But
nice
as Lee
general
knows,
one, yeah.
it is not easy at all. It is not easy at all. But you know, as I said earlier, finding the deals and coming up with the money is a lot easier than implementing technology and most especially culture. And I know Lee knows that as well, or probably better than most. So it really is a challenge. It does come down to you're working with people, and they are always going to be interesting, hardworking, professional, and very variable at the end of the day. So, but it's been a great experience. So Lee, thank you for welcoming me. Thank you for always being such a good partner and friend.
Excellent. That wasn't too bad. Any?
Hey, Matt.
Yeah, Darla,
Matt.
yeah.
I don't have a question, but maybe we can close with something tied into ethics, since it is Ethics Awareness Month, and maybe we can
we
loop
talked
in
a
one
little
more.
bit we talked a little bit about that during the thing, but during our presentation today. But yeah, any other? I mean, Andrew, you got probably a ton of stuff having relationships in the business on both sides. So you have carrier relationships and you have agency relationships now. As far as ethical considerations, is that ever, I say rear its ugly head, but do you ever have anything that pops up where you know something from one side of the house, you know something from another, and that may lead to an ethical conundrum that you have to deal with?
Yeah. No, it's a great question. It's a great point. I will tell you that not Lee, but agents like Lee, who I had very strong, close relationships with, would certainly reach out to me and ask for my impressions on a particular agency, right? What did I think of them? Now, there was no, negotiation going on between those two agents. It was really just discussion, but obviously, there'd be some understanding of what that discussion was for and what it was about. So to have that information and then begin doing what I'm doing, for me, that was information that I felt I really kind of owed a duty, even if not a legal one, just from a relationship standpoint, to kind of remain with that, particular business partner, whomever that was. But those are the types of things that you can certainly see there being overlap and there being some challenges with. We hear all the time about deals that are going on, right? And so I would just say, once we've heard that somebody is going to buy somebody, or I heard this deal just happened, that, right? It's because somebody probably violated a confidentiality agreement, right? And it's so prevalent that we don't really get overly concerned because it's really just gossip and we don't know where it emanated from and we don't know who started it. But really at the end of the day, it is a little bit dangerous because there are two parties that are engaged in a negotiation and ostensibly are going to engage in a transaction. And as I said probably many times now throughout the course of the hour, they're also employees often on both sides of that table that are going to be impacted by what happens there. So it's definitely an area that you have to walk, fairly cautiously. And I think getting into those conversations, agents approaching their carrier partners for information, and then those carrier partners having that information, and they tell somebody, and somebody tells. There are all kinds of landmines that can present themselves once that starts happening. But it happens a lot. It is very much part of the landscape. Is the rumor mill and the gossip that goes on about who's buying who and what this person heard and that person heard. So.
Yeah, and like you said, I'm sure transparency, like you mentioned, big one, in communication play a huge role in that. Trying to get through some of that stuff. So yeah, no, great stuff. I think I'm taking another quick look here, just make sure we don't have any other hands up. I don't think we do.
I thought I saw a couple more bubbles pop up. I could swear I saw Steve Shiner's name pop up with a question. Really?
Yeah, he is here. Yeah, he's been relatively quiet, I think, though.
He's cutting me some slack.
Maybe he's going easy on you. We're actually bugging him later on to go over some claim stuff for us at some point in time. So maybe it's just getting the lay of the land too. But no, thank you so much, Andrew, for taking the time today. I want to be cognizant of your time. We got 1 minute to go. So I appreciate it. Now, I know our chapter does. I hope people that attended today got some good information, as I know I did. I learned a lot of stuff that I didn't really know about going into this, that I don't get into because I'm on the company side, the dark side, as it were, I guess. But I appreciate it. Thanks so much. And you're getting a bunch of thank yous on the chat as well, too. So with that, I'll leave it. Say thanks to everyone. I appreciate it. Make sure that if you didn't already, just give your information, name and everything to or put it in the chat, and we'll make sure you get your CE for CPCU credits. And I'm hoping I see you in the near future, Andrew. Great to talk to you.
Yeah, likewise, Matt, this was terrific. I really appreciate the opportunity. This is a great group you've got here. Obviously, many folks who I've known for a while, so happy to have participated. And I know this was really high level stuff and we didn't get into the nitty gritty. If anybody ever wants to reach out with any specific questions, always happy to try and help and answer them, or at least give you Lee's phone number or Jack's phone number so you can call them and get a better answer. But thank you, Matt and Darnell and Sue. This was great. I really appreciate it.
Oh, our pleasure indeed. Well, thanks so much, everyone. I hope you have a good rest of the day. And like we said before we started, hopefully the weather gets a little better, because I need some warm weather. I need some more weather. I'm sure we all do. Thanks so much.
Thanks for putting it together.
Thank
guys.
you. Thanks, Andrew.
Thanks, everyone. Thank you.
Bye,
Have a
everyone.
good one.